Based on the provided data for Bitcoin, a bullish investment strategy is recommended. Price history shows an overall upward trend, with recent highs exceeding previous peaks. The forecast price also suggests continued upward momentum, reaching $69,500 within the next week. This positive outlook, coupled with the support price at $64,208.0, indicates a favorable environment for long-term investment. Therefore, I suggest entering a long position at the current price of $67,300. A stop-loss order should be placed at $64,208.0 to protect against significant price drops. The target price should be set at $69,500, aligning with the highest forecast price. This strategy capitalizes on the anticipated upward price movement while mitigating potential losses. Holding the position for the medium term, allowing the price to reach the target, could yield substantial returns. Based on the Ethereum price history and the provided forecast, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a general upward trend, but with some fluctuations. The forecast suggests a slight dip in the coming week, followed by a potential stabilization around $2,580. Considering the support price at $2,476.4, a long position could be considered as a safer option. An entry price around $2,520, slightly below the current price, would allow for some margin of safety. The stop loss could be placed at $2,476.4 to minimize potential losses. Target price could be set at $2,660, aiming to capture a potential upward move towards the resistance level of $2,579.95. This strategy allows for a medium-term investment horizon, taking advantage of the potential for price appreciation while mitigating risks with a defined stop loss. Based on the provided information for Ripple, a cautious investment strategy leaning towards the short term is recommended. The recent price history shows a fluctuating trend with no clear upward or downward momentum. The forecast also suggests a slight downward movement in the coming week, aligning with the current price hovering near the support level, while the resistance level indicates potential for upside. The risk-reward ratio appears more favorable for a short position. Therefore, a short position is advisable with an entry price around $0.535, slightly above the current price and below the forecast low. The stop loss should be placed at $0.545 to limit potential losses if the price unexpectedly moves upwards. The target price can be set at $0.525, aligning with the support level and offering a reasonable profit margin. This strategy allows for capitalizing on the potential price decline while managing risk effectively. Given the provided Solana price data and forecast, a medium-term bullish investment strategy is recommended. The historical prices show a consistent upward trend, with recent price action consolidating around the $167 support level. The forecast suggests continued upward momentum, with prices potentially reaching $189 within the next week. This indicates a favorable market environment for long positions. An entry price of $169 would allow you to buy in at a price slightly above the support level and below the current market price, minimizing immediate risk. A stop loss of $167 would protect your investment from unexpected downward movements. Target price should be set at $185, aiming to capture a significant portion of the potential upside while staying below the forecast's highest point. This strategy allows you to capitalize on the bullish trend while managing risk effectively. Given the price trends and forecast for Cardano, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend in the recent 2 weeks, with the forecast indicating further declines. The forecast suggests Cardano could drop from its current price to as low as $0.333. This indicates a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.352 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $0.3538 to protect against any unexpected price recovery. The target price should be set at $0.3389, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term downward momentum of Cardano while managing risk with a defined stop loss. Given the historical price data and the provided forecast for SU coin, a short-term investment strategy appears to be the most suitable approach. The historical price shows a slight downward trend over the past 2 weeks, and the forecast indicates continued consolidation around the current price level. The support price of $1.7743 and the resistance price of $2.1298 suggests that a significant price movement in either direction is unlikely in the near term. Therefore, a conservative strategy would involve a short position with an entry price around $2.05, a stop loss at $2.1298 to limit potential losses, and a target price of $1.94 to capitalize on the anticipated downward momentum. This strategy aims to profit from the consolidation phase and avoid exposure to a potential price surge towards the resistance level. Given the provided historical price data and the forecast for Filecoin, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a generally upward trend, with recent fluctuations indicating potential volatility. However, the forecast suggests a continued upward movement, albeit at a slightly slower pace. This suggests that Filecoin is likely to experience some consolidation before resuming its upward trajectory. Therefore, a long position is recommended, with an entry price around $3.75, aligning with the current price and the support level. The stop loss should be set at $3.69, just below the recent lows, to minimize potential losses. The target price should be set at $3.99, which represents a significant upside potential based on the forecast and the recent resistance level. This strategy allows for capitalizing on the anticipated upward movement, while mitigating risk through a well-defined stop loss. Based on the provided Theta network price information, a cautious investment strategy leaning towards the short term is recommended. The historical price data reveals a relatively volatile trend, with fluctuations above and below the $1.30 mark, while the forecast suggests a slight decline in the coming week. Price is hovering near the support level of $1.247. This proximity to support indicates a potential for a temporary rebound before any significant downward movement. Therefore, a short position could be considered with an entry price around $1.30. This allows for capturing potential profit from a price drop towards the forecast's lowest point of $1.29. A stop loss order should be placed at $1.31 to limit potential losses in case the price unexpectedly surges. The target price could be set at $1.26, aiming to secure profits before the price potentially finds support at the $1.247 level. This strategy prioritizes risk management and capitalizes on the anticipated short-term price decline, while mitigating potential losses. The historical price data for Dogwifhat shows some volatility, but overall, there isn't a clear upward or downward trend. The forecast suggests a slight downward movement in the coming week. Considering the current price and the forecast, a short-term investment strategy with a short position seems suitable. To implement this strategy, we can set an entry price at $2.67, a stop loss at $2.72, and a target price at $2.54. This approach allows us to capitalize on the potential price decline while mitigating risk. The stop loss will protect us from significant losses if the price unexpectedly rises above the entry point, and the target price offers a reasonable profit potential before reaching the support level. Given the price trends and forecast for Stellar, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $0.0902. The forecast suggests a potential increase towards $0.0991 over the next week. This indicates a bullish outlook in the medium term. Therefore, a long position is advisable to capitalize on the anticipated price increase. An ideal entry price would be $0.0945, slightly above the recent price fluctuations and below the immediate resistance. The stop loss should be set at $0.0902, aligning with the support level. To protect against potential downward movements, the target price should be set at $0.0991, aligning with the highest forecasted price, allowing you to maximize potential profits. This strategy allows you to benefit from the anticipated upward momentum while managing risk effectively. Based on the provided price information for Starknet, a short-term bearish investment strategy appears to be the most suitable approach. The historical price data shows a downward trend, with the recent price hovering near the support level of $0.387. The forecast price also indicates a continued decline over the next week, suggesting a lack of upward momentum. Therefore, an aggressive short-term strategy could involve entering a short position at the current market price, around $0.403. The stop loss should be set at $0.422, slightly above the recent resistance level and the forecast high. To protect against potential price reversals, the target price could be set at $0.392, aligning with a significant support level and the forecast low, allowing for a reasonable profit potential while managing risk. This strategy capitalizes on the anticipated price decline and aims to generate quick returns within a short time frame. Given the price trends and forecast for PENDLE, a medium-term investment strategy focusing on a long position seems promising. The historical prices show a generally upward trend, with recent price increases reaching $5.04. Although the forecast suggests a slight pullback in the coming week, it still indicates a positive outlook with prices hovering around $4.9. The support price at $4.687 provides a safety net, while the resistance at $5.035 indicates further potential for upward movement. Therefore, a long position with an entry price of $4.85, aligning with the forecast and historical price trends, is recommended. The stop loss should be set at $4.69, just below the support price, to minimize potential losses. The target price could be set at $5.03, aiming to capture the potential upside movement towards the resistance level. This strategy allows for capitalizing on the expected medium-term growth of PENDLE while managing risk effectively. Given the price trends and forecast for Render, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Render could drop from its current price to as low as $4.97, while the support price sits at $5.096. This indicates a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $5.35, aligning with the recent price action, would be ideal. The stop loss should be set at $5.45 to protect against any unexpected price recovery. The target price should be set at $4.95, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $5.096. VeChain's recent price history shows a slight upward trend, but the forecast suggests a minor correction in the coming week. The current price is hovering near the support level, indicating potential buying opportunities. Given this, a long-term investment strategy focused on the VeChain asset appears promising. To execute this strategy, we should consider an entry price around the current support level of $0.02246. A stop loss order could be placed slightly below this level, around $0.0222, to mitigate risk. The target price should be set at a reasonable level, above the resistance of $0.0235, perhaps around $0.0245, to allow for potential growth while managing risk. This approach allows us to capitalize on VeChain's potential for long-term appreciation while minimizing potential losses. Based on the provided information for Binance Coin, a moderately aggressive investment strategy would focus on a short to medium-term approach. The 2-week price change shows a generally upward trend, with recent fluctuations indicating some volatility. The forecast suggests continued upward movement, albeit at a slightly slower pace. The current price is near the support level of $563.6, suggesting a potential buying opportunity. Considering these factors, a long position is recommended. An ideal entry price would be around $585, aligning with the recent dip in price and below the resistance level of $606.3. A stop loss should be placed at $573 to minimize potential losses if the price drops unexpectedly. Target price could be set at $606. Aiming to capture the anticipated upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating losses in case the market moves against the prediction. Given the current price trend and forecast for Conflux, a short-term bearish investment strategy appears to be the most suitable. The 2-week price change shows a downward trend, and the forecast indicates further declines over the next week, while the support price sits at $0.1517. The resistance level is at $0.1821, suggesting a limited potential for upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $0.165 could be considered, aligning with the current price and the forecasted decline. The stop loss should be set at $0.174, slightly above the current price, to protect against unexpected price surges. The target price could be set at $0.148, slightly above the lowest forecasted price, allowing for potential profits before the market potentially reaches major support. Based on the provided price information for Worldcoin, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a general upward bias, while the forecast indicates a slight decline followed by a potential rebound. The support price of $2.081 acts as a strong floor, suggesting a low likelihood of a significant drop. However, the resistance price of $2.464 presents a hurdle for sustained upward momentum. Therefore, a long position is recommended with an entry price around $2.25, slightly below the current price and above the support level. This allows for potential profit if the price rebounds towards the resistance level. The stop loss should be set at $2.10 to limit potential losses if the price declines below the support. The target price can be set at $2.40, aiming to capture a significant portion of the potential upside while leaving room for further price appreciation. This strategy balances risk and reward, capitalizing on the potential for a medium-term price increase while mitigating potential losses. Based on the provided price information for Avalanche, a cautious investment strategy is recommended. The 2-week price history reveals a fluctuating trend, with a slight downward bias, while the forecast predicts a continuation of this downward trend. The support price at $26.68 suggests a potential floor for the asset. Considering this, a short-term investment perspective is advisable to capitalize on the anticipated price decline. An entry price around $27.00, slightly above the current price, would allow for a small margin of safety while still capturing potential downside movement. The stop loss should be set at $27.50 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $26.50, aiming to profit from the predicted price drop while staying below the support level. This strategy allows for a balanced approach, minimizing risk while seeking modest returns in the short term. Given the price trends and forecast for Jupiter, a medium-term investment strategy seems most appropriate. The historical price data shows an upward trend, with recent fluctuations suggesting consolidation. Forecast indicates continued upward momentum, with prices projected to reach $1.12 within the next week. This suggests a bullish outlook in the medium term. Therefore, a long position on Jupiter is recommended. An entry price of $1.005, slightly above the current price and the support level, would allow for a potential entry point. A stop loss should be set at $0.995 to mitigate risk in case of a sudden price drop. The target price could be set at $1.10, allowing for a potential profit of around $9.5. Before the projected resistance level. This strategy balances risk and reward, capitalizing on the expected upward trend while protecting against potential downside movements. Based on the provided EOS price data and forecast, a short-term investment strategy appears to be the most suitable. The historical prices show some volatility, but the recent trend suggests a slight upward movement. The forecast indicates a continuation of this upward trend in the coming week, albeit at a slower pace. This suggests a potential window of opportunity to enter a long position. Considering the support price of $0.4687, and the resist price of $0.4766. An ideal entry price for a long position could be around $0.472. This price point is slightly above the recent low and below the immediate resistance level, offering a favorable risk-reward ratio. A stop-loss order could be placed at $0.469 to limit potential losses if the price reverses downwards. The target price could be set at $0.485, aiming to capture a portion of the anticipated upward movement as per the forecast. TRON shows a 2-week price change that fluctuates slightly around the $0.16 mark. The forecast indicates a continued upward trend over the next week, reaching potential highs of $0.173. Given this information, a long-term investment strategy appears promising. Considering the current price hovering around $0.16 and the forecast reaching $0.173, an entry price of $0.161 presents a favorable opportunity. A stop loss at $0.158 would protect against significant price drops, while a target price of $0.171 allows for potential profit, taking before the forecast reaches its peak. This strategy capitalizes on the anticipated upward movement of TRON, while managing risk effectively. Given the price trends and forecast for SE, a conservative investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.3115. The forecast suggests SE could decline further in the short term, reaching as low as $0.427. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For an aggressive short-term investment strategy, an entry price of $0.46 would be ideal. Aligning with the current price, the stop loss should be set at $0.453 to protect against any unexpected price recovery. The target price should be set at $0.432, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term downward momentum while managing risk effectively. Given the price trends and forecast for Shiba Inu, a medium-term investment strategy appears most suitable. The historical prices show a slight upward trend, but the forecast suggests a period of consolidation with prices potentially fluctuating around the $0.0000188 mark. The support price at $0.0000179 provides a safety net, while the resistance at $0.0000190 indicates a ceiling for the immediate upward movement. This suggests a sideways trend with potential for modest gains. Therefore, a long position is recommended for this medium short-term strategy. An entry price near the support level of $0.00000179 would allow you to buy at a potentially discounted price. The stop loss should be set slightly below the support at $0.00000176 to minimize risk. The target price could be set at $0.00000190, aiming to capitalize on a potential breakout above the resistance level. This strategy allows you to participate in the potential upside, while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Dogecoin, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a general upward trend, with recent fluctuations around the $0.14 mark. The forecast suggests continued growth, with prices potentially reaching $0.149 in the coming week, while the support price at $0.1152 provides a safety net. The resistance at $0.14465 indicates that further upward movement may be limited in the short term. Therefore, a long position is advisable for a medium-term investment strategy. An ideal entry price would be around $0.142. Aligning with the current price and allowing for potential upside. A stop loss should be set at $0.138 to protect against unexpected price drops. The target price could be set at $0.149, capitalizing on the forecast and aiming for a profit before encountering resistance. This strategy allows for potential gains while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast suggesting further declines in the coming week. While the current price is close to the support level of $0.4311, the resistance at $0.4564 indicates limited upside potential. Given this scenario, a short position appears to be the most suitable strategy to capitalize on the anticipated price decrease. For an aggressive short-term investment strategy, an entry price of $0.445 could be considered, aligning with the recent price action and the forecast. The stop loss should be set at $0.456 to protect against any unexpected price surges. The target price should be set at $0.425, allowing for a reasonable profit margin before the price potentially reaches the support level. This strategy aims to capitalize on the short-term bearish momentum, while managing risk through a well-defined stop loss. Based on the provided price history and forecast for Aevo, a short-term investment strategy appears most suitable. The historical price data shows fluctuations, but generally trends upward. The forecast, however, suggests a slight decline in the coming week. This discrepancy between the historical trend and the forecast presents an opportunity for a short-term bearish position. Entering a short position at the current price of approximately $0.361 could be beneficial. A stop loss order should be placed at $0.3724, the resistance price, to limit potential losses if the price unexpectedly rises. The target price for this short position could be set at $0.3446, the support price, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish outlook suggested by the forecast while mitigating risk with a well-defined stop loss order. Based on the provided price history and forecast for Litecoin, a short-term investment strategy appears to be the most prudent approach. The recent price history exhibits a fluctuating pattern, but the forecast suggests a downward trend in the coming weeks. The current price hovers near the resistance level, indicating a potential for a pullback. Therefore, a short position would be advisable. An entry price around $0.00800 would allow you to capitalize on the anticipated decline. The stop loss should be set at $0.00830 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.00750, aiming to profit from a moderate decline towards the support level. This strategy focuses on capitalizing on the short-term downward momentum while managing risk through a well-defined stop loss. Given the price trends and forecast for Sun Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $0.01758. The forecast suggests Sun Coin could potentially decline further, reaching as low as $0.0167 in the coming week. The resistance at $0.01891 indicates a strong selling pressure, making it unlikely for the price to rebound significantly in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. A suitable entry price would be $0.0183, slightly above the current price, allowing for a small margin of safety. The stop loss should be set at $0.01891, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.01758. The support level, aiming to capture a portion of the anticipated decline. This strategy allows for a measured approach to potentially profit from the bearish sentiment surrounding Sun Coin in the short term. PEEP shows a volatile price history with recent fluctuations around $0.000010. The forecast suggests a slight upward trend, with prices potentially reaching $0.000016 in the coming week, while the support price of $0.0000091 offers a safety net. The resistance at $0.000017 indicates a potential ceiling for growth. Given this information, a short-term long position appears to be the most suitable strategy. To execute this strategy, an entry price of $0.000014 would allow for a favorable entry point before the potential price increase. A stop loss at $0.000010 would protect against unforeseen downward movements, while a target price of $0.000016 aims to capitalize on the projected price rise. This approach allows for a balanced risk-reward profile, aiming to profit from the anticipated short-term upward momentum while mitigating potential losses. Given the historical price data and the provided forecast for Sun Coin, a short-term investment strategy appears to be the most suitable approach. The recent price fluctuations suggest volatility in the short term. The forecast indicates a downward trend, with prices potentially dropping from the current level towards the support price. This bearish outlook, coupled with a relatively low support price, suggests a potential for profit from a short position. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $5.22. The stop loss should be set slightly above the current price, around $5.25, to limit potential losses. The target price could be set at the support price of $4.67, aiming to capitalize on the anticipated decline. This strategy aims to take advantage of the short-term price movements and secure profits before the price potentially rebounds. Based on the provided data for Bitcoin Cash, a medium-term investment strategy appears most suitable. The historical price shows a general upward trend, but recent fluctuations suggest some consolidation before a potential breakout. The forecast price indicates a slight decline in the short term, followed by a potential rebound towards the end of the period. This suggests a cautious approach, entering a long position after a brief dip. A reasonable entry price would be around $355, slightly below the recent support level of $357. The stop loss should be placed at $348, the identified support price. To limit potential losses, target price can be set at $369, aligning with the resistance level and capturing the potential upside momentum. This strategy allows for a balance between risk and reward, aiming to capitalize on the anticipated rebound while minimizing potential downside. Based on the provided Chainlink price history and forecast, a long-term investment strategy appears to be the most suitable approach. Price history shows a consistent upward trend, indicating underlying strength and potential for continued growth. Although the recent price has slightly fluctuated, the forecast suggests a continuation of this upward momentum. This long-term perspective aligns with the support and resistance levels, which further reinforce the bullish outlook. Therefore, we recommend a long position in Chainlink. An entry price of $11.1 would allow you to buy in at a slightly discounted rate, taking advantage of any potential short-term dips. The stop loss should be placed at $10.9 to protect against significant downside risk. The target price can be set at $12.2, aiming for a reasonable profit margin based on the resistance level and the forecast's upward trajectory. Given the price trends and forecasts for Polkadot, cautious investment strategy would focus on a medium-term approach. The historical prices show a slight downward trend recently, with the current price hovering near the support level of $4.205. The forecast suggests a further decline in the coming week, potentially reaching as low as $4.13. However, the resistance level at $4.579 indicates potential for a rebound in the medium term. Therefore, a short position is advisable for the medium term, capitalizing on the anticipated decline. An entry price of $4.30 would allow for a safe entry point, aligning with the current price and recent downward trend. The stop loss should be set at $4.38 to protect against any unexpected upward movement. The target price should be set at $4.15, slightly above the forecasted lowest price, allowing you to take profits before the market potentially rebounds. This strategy aims to mitigate risk while capturing potential gains from the short-term price decline. Given the price trends and forecast for Near protocol, a medium-term investment strategy appears most suitable. The historical prices show a slight upward trend, with recent fluctuations around $4.7 to $5.0. The forecast suggests a continued upward movement, reaching around $4.8 to $4.9 in the coming week. However, price is currently close to its resistance level of $4.99, indicating a potential for consolidation or a slight pullback before further growth. Therefore, a long position is advisable for a medium-term investment strategy. An ideal entry price would be around $4.75, aligning with the recent support level and offering a margin of safety. The stop loss should be set at $4.68, slightly below the recent support level, to minimize potential losses. The target price could be set at $4.95, aiming to capture a significant portion of the forecasted upward movement. This strategy allows for a balanced approach, capitalizing on the potential for growth while managing risk through a well-defined stop loss. Given the price trends and forecast for stacks, cautious investment strategy would focus on a short-term approach to take advantage of the potential for a slight upward movement. The historical prices show a fluctuating trend, with the current price hovering near the support level of $1.795. Forecast suggests a gradual increase towards $1.88, indicating a bullish sentiment in the short term. However, the resistance level at $1.926 suggests that significant upward momentum might be limited. Therefore, a long position is advisable, aiming to capitalize on the potential price increase towards the forecast price. An entry price of $1.81, slightly above the current price, would allow you to enter the market at a favorable point. The stop loss should be set at $1.79, below the support level, to protect against any unexpected downward movement. Target price should be set at $1.88, aligning with the highest forecast price, allowing you to take profits before the price potentially encounters resistance. Based on the provided price information for Aptos, a medium-term investment strategy appears most suitable. The historical price data shows a relatively stable upward trend, with the price hovering around $9.2. Forecast predicts a consistent price level of $10 for the next week, indicating a potential for sideways movement or a slight upward correction. The support price of $6.3 signifies a strong floor for the asset, while the resistance price of $10.38 suggests a potential ceiling for the immediate future. Therefore, a long position is recommended for a medium-term investment horizon. An entry price around $9.2 aligns with the current market price and the forecast. A stop-loss order should be placed at $9.73 to minimize potential losses in case of a sudden price drop. The target price could be set at $10.38, aiming to capitalize on the potential upward movement towards the resistance level. This strategy allows for a balance between risk and reward, taking advantage of the asset's upward momentum while mitigating potential downside risk. Based on the provided price history and forecast for Litecoin, a medium-term investment strategy appears to be the most suitable. The historical price data shows a generally upward trend, with Litecoin fluctuating between $64 and $74. The forecast suggests a continued upward movement, with prices expected to hover around $72 for the next week. This indicates potential for capital appreciation within a medium-term horizon. Therefore, a long position on Litecoin is recommended. An entry price of $70 would allow you to buy in near the current market price and capitalize on the anticipated price increase towards the resistance level of $74.96. A stop-loss order at $66.19, slightly below the support level, would help mitigate potential downside risk. The target price should be set at $74.96, aiming to capture the full potential upside before the price potentially encounters resistance. This strategy allows for a balanced approach, taking advantage of the bullish forecast while managing risk through a well-defined stop-loss. Given the price trends and forecast for Uniswap, a cautious investment strategy would focus on a short to medium-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $7.325. Forecast suggests a gradual increase in price over the next week, potentially reaching the resistance level of $8.596. This indicates a period of consolidation and potential upside, making a long position advisable. To implement this strategy, an entry price of $7.50 would be suitable, allowing for a slight margin above the current support level. The stop loss should be set at $7.35 to protect against a sudden drop below the support. The target price could be set at $8.05, aiming to capitalize on the projected price increase while staying below the resistance level. This approach balances risk and potential reward, allowing for potential profits from a gradual price appreciation in the short to medium term. Given the price trends and forecast for Bittensor, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $527.9. The resistance is at $640.5, indicating that a significant upward movement is unlikely in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of $570 would be ideal, aligning with the forecasted price. The stop loss should be set at $580 to protect against any unexpected price recovery. Target price should be set at $520, slightly above the support level, allowing you to take profits before the market hits major support at $527.9. This strategy aims to minimize potential losses, while maximizing profits from the anticipated downward movement in Bittensor's price. Based on the Internet Computer price history and forecast, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with a general upward bias, while the forecast suggests a slight increase in price over the next week. The historical data and the relatively close proximity of the support and resistance levels indicate a period of consolidation. Therefore, a long position is recommended, aiming to capitalize on the potential for a sustained upward move. Conservative entry price could be set at $8.15, aligning with the support price and offering a margin of safety. The stop loss should be placed slightly below the support level at $8.10 to minimize potential losses. The target price could be set at $8.60, aiming to capture a significant portion of the potential upside movement towards the resistance level. This strategy allows for a balanced approach, seeking moderate gains over a medium-term horizon while managing risk effectively. Given the price trends and forecast for Artificial Superintelligence Alliance, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price close to its forecast and near the support level. The resistance is at $1.461, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $1.41 would be ideal, aligning with the current price and the downward trend. The stop loss should be set at $1.461 to protect against any unexpected price recovery. The target price should be set at $1.323, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the anticipated decline in prices and limit potential losses. Based on the provided Optimism price history and forecast, a short-term investment strategy appears to be the most suitable. The recent price movement shows a slight upward trend, but the forecast suggests a slight pullback in the coming week. The current price sits near the support level, indicating potential for a short-term dip before potentially rebounding. Therefore, an investment strategy could involve taking a short position at the entry price of $1.72, with a stop loss at $1.75 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.69, aiming to capitalize on the anticipated slight price decrease. This strategy aims to profit from the potential short-term price correction while managing risk through a defined stop-loss order. Based on the provided Ethereum Classic price history and forecast, a short-term investment strategy with a bullish outlook appears most suitable. Price has shown a consistent upward trend over the past 2 weeks, reaching a recent high of $20. The forecast predicts continued growth, with prices expected to stabilize around $19. This suggests a potential for short-term price appreciation. Therefore, an aggressive investment strategy would involve taking a long position on Ethereum Classic. A reasonable entry price would be around $19, aligning with the forecast and allowing for potential upside. The stop loss should be set slightly below the recent low of $18 to minimize potential losses. The target price could be set at $19.5. The resistance level, aiming to capitalize on the potential price surge. This strategy capitalizes on the current upward momentum and the forecast for continued growth in the short term. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a slight downward trend, with the current price hovering near the support level of $16.1. The forecast indicates a continuation of this downward trend, suggesting that Ethereum name service might drop further in the coming week. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $16.5 aligns with the current price and the potential for further downward movement. The stop loss should be set at $17, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. The target price should be $15.5, aiming to capture a decent profit before the price potentially finds support near $16.1. This strategy allows for a controlled exposure to the market, taking advantage of the bearish outlook while mitigating potential risks. Given the price trends and forecast for Solana name service, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating pattern with recent upward movement, suggesting potential for further growth. The forecast indicates a steady increase in price over the next week, reaching $0.269. This aligns with the support price of $0.2568, indicating a strong foundation for further price appreciation. Therefore, a long position is recommended to capitalize on the anticipated upward momentum. An entry price of $0.250 would allow you to buy in at a relatively attractive price point, while the stop loss should be set at $0.248 to minimize potential losses. the target price should be set at $0.275, aiming to capture a significant portion of the projected price increase. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure in the medium term. Based on the provided information for Aave, a cautious short-term investment strategy appears suitable. The 2-week price history demonstrates a fluctuating trend with no clear upward or downward momentum. The forecast indicates a slight decline in the coming week, suggesting potential for short-term profit. Therefore, an investment strategy could involve entering a short position at the current price of around $152. Given the forecast and the support price of $139.44, a stop loss could be set at $158 to limit potential losses. Target price could be set at $145, aiming to capture a portion of the anticipated price decline. This strategy prioritizes risk management by setting a stop loss above the entry price and targets a conservative profit margin. Given the price history and forecast for Injective, a medium-term investment strategy appears to be the most suitable. The historical prices show a slight upward trend, but the forecast suggests a period of consolidation around the $21 price level. This indicates that Injective might not experience significant price fluctuations in the short term. Therefore, a medium-term approach allows for capturing potential upside movement while managing risk during the consolidation. A long position is recommended for this strategy. An entry price of $20.50 provides a margin of safety below the current price and historical support level of $20.15. The stop loss should be set at $20.10 to limit potential losses if the price falls below the support level. Target price can be set at $22.20, which aligns with the resistance level of $22.35 and offers a reasonable profit potential. This strategy aims to capitalize on the potential for Injective to break above the resistance level and continue its upward trend in the medium term. Based on the provided information for Polygon, the investment strategy should lean towards a short-term approach. The historical price data shows a recent downward trend, and the forecast predicts further declines, while the support price of $0.3553 provides a potential floor. The resistance level of $0.3652 indicates limited upside potential in the short term. Therefore, an aggressive short-term strategy would involve taking a short position on Polygon. A suitable entry price would be around $0.361, aligning with the first forecast price. The stop loss should be set at $0.366, slightly above the current price and the resistance level, to minimize potential losses. The target price could be set at $0.355, aiming to capture the anticipated decline towards the support level. This strategy capitalizes on the bearish sentiment indicated by the price trends and forecasts, while managing risk through a defined stop loss.